Hello everyone, welcome to my channel. André Cardoso here. Thank you for being here as always. It's a pleasure to share my work with you. I hope you had a nice trading week. Today it's Friday, the last day of the week. I want to update some of these charts that I shared with you before. Let's start with euro versus dollar. I stay on a lower time frame. This is a 2 hours time frame chart. I called your attention to this after the formation of this bearish shark pattern, to this price action inside this. Actually, at that time we were trading basically 108.30, if I'm not wrong, or something close to this price zone, and we see the price then. It spends a lot of time moving sideways. So we have a range for euro versus dollar between 108.87 and 107.66. So this is the daily fractal support and daily fractal resistance. I need to see a move or above the resistance or below the support. A move below the support or a breakout of the support may trigger a move to the downside. We have what we may call a potential edge and shoulders formation right there. So I admit that a clear violation of this support level may trigger a move to the downside for euro versus dollar. I will also pay attention to the golden Fibonacci projected at 69, actually at 106.93. That's the number. That's the price. And above the golden Fibonacci, above 109.53. If the price breaks above the resistance, we may see then a move towards that Fibonacci level, and I will pay attention also to potential pressure if the price touches these Fibonacci extension levels below or above resistance or below support. Let's move forward into for the cable. We may see this as a potential cup and handle formation. For that handle to form, I'm waiting for the retracement expected after the formation of this shark pattern. So I still expect the cable to pull back a little bit after the formation of this pattern, even if limited to the 38% Fib or even 50% Fibonacci retracement, which is a default target for the shark. But at least a 38% Fibonacci I was expecting, and I still am expecting the retracement back to these Fibonacci levels. But of course, as you can see, this last week the cable was capable to hold above this fractal printed at 123.13 very well. So I will not be surprised to see moves to the upside. If that happens, I will pay attention to this golden Fibonacci extension also projected above the resistance at 125.12 for the cable. For now, we're still holding a position to the downside, assuming that after the formation of this pattern, we need to see a retracement to the 38% Fibonacci level. Let's move forward into the Australian dollar. I shared this scrap pattern before with you. It's completed at 70.55, golden Fibonacci extension level right there, and then the price starts to pull back immediately. We have default target at the 38% Fibonacci for that scrap pattern, and then I was expecting the formation of another one, an internal or a lower degree bullish shark pattern. It was projected at 68.47. It did not complete the pattern. It can complete the pattern if the price starts to fall from this price zone, but of course, if the price starts to move sideways, this pattern starts to vanish. But I admit it's still possible. I admit the possibility for to form this shark pattern at 68.47. Of course, this very strong bounce from these levels, and let's, as I said, if the price keeps moving sideways, eventually it will not complete this sequence. So this is the Australian dollar, which is now, by the way, let me change this color here, we are now threatening the previous support of this three drives pattern formation, as I shared I shared this on socials also. We have the first high, the second and the third drive, forming the three drives pattern formation. We assume the price will trade to the lows again, to the previous lows. The first one, the first correction, we assume this is a default target for the three drives pattern formation. So we assume the price will retest the lows of the pattern. So that being said, did not complete this shark pattern. I need to wait for further price developments. As I said, we are now threatening again the lows of this previous channel, so that may also be used as an element of pressure, in this case of course as a resistance. I will not be surprised to see the Aussie starting to pull back again from this price zone. We are also threatening the horizontal fractal resistance printed at 69.47. Let's check the Kiwi. The Kiwi may form also, it's very similar with others, specifically with the cable. It may also form the cup and handle formation, and I like the Kiwi because the Kiwi, it was already forced to pull back almost to the 50% Fibonacci retracement level. Instead, as a cable, as I showed you before, it's not trading not even the 38% Fibonacci level, which is positioned at 122.08, so we are far away from those levels. The Kiwi was forced to retest the previous highs in the weekly fractal, and it was forced to pull back immediately back to the 50% fib. So this may be the formation of the handle for the Kiwi. Of course, that pattern will only be confirmed or validated after a clear violation of this weekly fractal resistance. The 224% Fibonacci extension, this is the price zone, or this is the completion point for the shark pattern that I projected before, that the price did not hit. So the price just failed to complete that shark pattern projected at 65.53, just by a few points. And in fact, we talked about that possibility, the formation of the shark pattern converging with a retest of this ascending trend line support from the previous channel. So as you can see, the price has found resistance at the channel support and then starts to pull back again. I talked exactly about that possibility, but of course I was expecting the formation of the pattern 65.53, a retest of the channel, and then being forced to pull back. It didn't complete the pattern, even though I believe if you pay attention to the price action, I believe it may offer it offered a nice opportunity to go or to try the short side now. And because, as I said, because this may happen, this may roll as this may play as cup and handle formation, I will pay attention to potential moves above the weekly fractal. I need to see the price breaking above the fractal, retesting the fractal again, and rejecting the fractal. I need to see, okay, I need to see the price pulling back after breaking above. I need to see a pullback, a retest of this price zone again, and then I need to see the price starting to move to the upside. Wait for this kind of course, we don't know where the price will find resistance, but we need to see the price kind of rejecting to recover again this resistance after breaking higher. If that happens, of course, we don't know if that will happen. The price can stay below these highs without printing higher highs. But that being said, I will pay attention to the validation of this cup and handle formation for the Kiwi. Of course, if you are expecting, as I am, retracements for the cable, for Aussie, for the euro versus dollar, if you are expecting that retracement, of course, the Kiwi, you are expecting the same. So if the Dixie starts to bounce from this price zone and all those measures starts to pull back, the kiwi will not be an exception. So basically it will follow his brothers and sisters, basically. Aussie versus the New Zealand. I talked about this breakout of this structure before. We were threatening the breakout of this ascending trend line support, and there's nothing to show you here at this point, just to point that we had a nice breakout of the structure. We can measure in terms of Fibonacci retracement level. Let me see where we are. 38% Fibonacci level. It's being used as a support, as we can see, but also the 38% Fibonacci retracement from these highs as resistance already. So basically we have a range kind of between the 38% Fibonacci retracement levels, one of them as support at 107.60 and the other one at 108.14 as resistance. I admit that violation of the lows may trigger I'm not saying momentum to the downside, but at least a new lower low it will print for sure. If the price breaks below, of course it needs to find support somewhere, and I admit the price will search for the next Fibonacci levels projected below 107.05 and 106.50. So those are the next Fibonacci levels I will pay attention to if the price starts to fall below the recent support level for Aussie versus the New Zealand. We don't have a clear pattern emerging. We may see the price finding some support at some point and creating kind of a bearish flag pattern. It may take some time to develop this price structure. It may print new lower lows and start moving inside kind of a descending wedge. We don't know what will happen. I think we need to wait for more price action in order to try to identify which type of structure the price is building. If a wedge, a pennant, a triangle, a flag, whatever the price needs to print, we need to wait for that to start to emerge. For now it's too soon. I don't see any clear pattern emerging at this point for the Australian dollar. Just to let's say to remember you about the breakout of this structure after the formation, of course, don't need to say, this bearish shark pattern at 224% Fibonacci extension level. Let's go to the Norwegian krone. Very, very tricky, but at the same point very technically. So basically we have this descending channel that I draw before and I shared before with you here. We have this descending channel. We have the first highs. Actually, let me adjust this channel to this first low. So we have the price starts to trade inside this range, as you can see, and then suddenly the price breaks the channel, finds support, recovers the channel back to the midpoint of this channel again. As you can see, it forms this shark pattern at the 224 and then starts to pull back again to the bottom of the channel. A false breakout again, recover, and we stay, and it plays this action multiple times. It creates kind of a sense of a false breakout of the channel multiple times, and then and as I used to say, every time we see a false breakout of the channel, at some point the price needs to create a false breakout above. So if there's a false breakout below, I will expect a false breakout above at some point. I was not expecting multiple threats of the bottom of the channel, but then at some point the price comes back to the top of the channel, finds resistance at 10.30 and then starts to pull back again and back to the midpoint of the channel again without breaking below this regression. That's a regression channel or a regression trend inside this channel. And as we can see, we're still rejecting to at this point we're still rejecting to trade above this recent fractal printed or positioned at 9.95, and I will call your attention to this fractal for a specific reason. Some of you are already familiar with the pattern the market is printing for us. So at some point, of course, when I saw, and I shared this chart before with you, at some point when we saw the price reinforcing this kind of a support, trend line support right there, at some point we start to pay attention to the potential breakout below this trend line. So we saw the price approaching this trend line, and we start to think about the potential breakout below, which may trigger more moment to the downside. And it's still possible to see if the price pulls back again to the daily fractal. I will not be surprised to see that kind of a price action or that kind of a reaction after a breakout of this price structure. So now I need to adapt or to adjust this trend line. Let's consider these potential trend line supports. So this support right there, the daily fractal, and of course just to complete the sequence, once we start to think about the possibility of a breakout below, we start to project patterns at the bottom. In this case, I started to project the eventual crab pattern at the golden Fibonacci extension. Of course, the price then later starts to bounce, and this pattern starts to vanish. Okay, so this is no longer a valid option at this point, in my opinion. I need a clear move to the downside, which has failed. And now the price starts to print another pattern for us, a different event. This one that may force a move to the upside. And it's a very limited move. So as I said before, I trade the pattern expectations. I don't trade false expectations. If there's a pattern, if there's a bullish crab pattern completed at the bottom, I will not expect the price to rally 500 points. Okay, I will target a specific price zone based on a specific Fibonacci retracement level. I will target the 38% fib. I will target the golden Fibonacci as a second target, but I will measure my risk and my reward based on my first target zone. So this is what I will trade. I don't trade based on false expectations. The market can later maximize my profits if that is the case, but I will be focused on my first target and main objectives, which is a bounce towards the 38% Fibonacci retracement. So the same will apply for the edge and shoulders formation. So we have here what we may call an inverted edge and shoulders. We have the fractal resistance positioned. Let me remove this. We have the fractal resistance positioned at 9.95, acting as a next zone for that pattern. So I admit that the violation of the recent highs could trigger a move to the upside, limited, and just to give you an idea, limited to 1.2% move to the upside. So that's my main, this is my target zone. So okay, so I will not target unrealistic targets or price zones. Okay, this is the real target for that pattern. You have an edge and shoulders. That pattern should trade at 200% fib. If the market then later maximizes your profit, better, cool guy. We appreciate, but we will be focused on this process as a start. So basically, fractal resistance, it's now our next zone. I admit that a breakout of this fractal will trigger a move to the upside, or could trigger a move to the upside, even though, of course, don't ignore a move below those fractals, because that's well, we still inside this bearish momentum. In order to change this momentum, we need to see a clear move above the weekly fractal 1030. So we need to see a move above this fractal in order to consider a clear, swift after this momentum to the downside. Okay, so let's wait for that. And now let's enter those yen sequences, or these yen forex pairs, and let's pay attention to some of these patterns the market may form for us. Of course, we don't know what will happen. We just know what to do after the formation of a specific pattern. And what I will show you here for now, it's pure speculation for all the Japanese yen pairs. But taking into consideration the bearish momentum we are all facing, or we are all facing with the Japanese pairs, dollar yen, euro yen, the pound, the Aussie, we are in a bearish momentum. So the favorite patterns, of course, will be the ones that favors a move to the downside. So if you find a way to short the market, you should try to engage that pattern. Okay, of course, that doesn't invalidate the possibility to form patterns to the upside, even if there's limited moves to the upside. But if there is a pattern to trade in that direction, of course, we rely on those pattern default targets and default expectations. So that being said, everything that I will show you here for the Japanese yen pairs, for now, it's pure speculation. Now, dollar versus the yen, 2 hours time frame, 2 hours, 200 moving average, now approaching from the recent highs. I see this as a potential resistance price zone, and we still favor more momentum to the downside, but pay attention to this daily fractal resistance. A violation of this daily fractal should trigger a limited move to the upside, and I will pay attention to this butterfly pattern projected at 134.39, 134.40. Okay, bearish butterfly pattern projected there. If the price breaks above, I will prepare a position to the short side with that butterfly pattern. We are far away from this support zone, but if that happens, it may take some time. Today it's Friday, probably it will happen. If that happens, it will be only the next week, unless the price falls in aggressive way back to the support today until the end of the day, which I don't believe. But during the next week, I will pay attention to this breakout of this support if the price starts to approach this zone again, of course. And as I suggest here, a clear violation of this support, and I will pay attention to the eventual formation of a bullish deep crab pattern, which is now projected at 124.51. So both situations possible: below the support, bullish crab; above the resistance, bearish butterfly. Now let's go to euro versus the yen, and let's keep these the next ones I will keep on higher time frames, like on a daily time frames. And in fact, let me decrease my time frame on this one. This is euro versus yen. This is a 12 hours time frame, just a time frame below the daily. And this, some of you are already seeing this pattern and imagine what I'm about to say. We have what we may call a technical double bottom. We have a technical double bottom, and many of you may be asking, but I have a technical double bottom in an uptrend. Yes, we have an uptrend. We have a technical double bottom after a small correction to the downside, small correction that took already 7.5% to the downside. So I admit this may trigger a move to the upside, but as I said multiple times, we rely on default expectations for those patterns. Again, I will not say that double top or this double bottom will trigger a move to 155. That's not real. Okay, that double top, or this double bottom, I'm sorry, this double bottom, if triggered, it should target the previous highs and weekly fractal resistance, nothing more than that. I will not say the price will trade higher 200, 400 points, because that's not real, okay? A move above 142.85 should target, or should trigger a move, or let's say a breakout of this fractal should trigger a move to the 200% Fibonacci extension. In this case, convergence between the previous highs and the default target for the pattern. And because I can be wrong, or not me, but the price can eventually fail my expectations to give sequence to this pattern, and if that happens, of course the market will trade lower. And if that happens, a breakout of this support level, and I will pay attention to the golden Fibonacci at 133.96. So this is where the bullish crab pattern will complete, a deep crab pattern, in fact, if the price starts to fall from this current price zone without breaking above the recent fractal resistance levels. Okay, so attention with a move above the resistance or below the support for the euro versus the Japanese yen. The pound versus the yen is very similar. We have also a technical double bottom right there. We have a neck zone at the recent resistance, 161.53. A clear move above this resistance should trigger a limited move to 165.30. So this is the 200% Fibonacci extension and the default target for the double bottom. We have also, as some of you already know, we have also default targets for this bullish shark pattern, just a few points above the recent highs at the 50% Fibonacci retracement level, 162.35, just above the recent high. So I will not be surprised to see this technical double bottom also for the pound versus the yen, and a move towards the 200% Fibonacci extension level, which may also converge with a retest of previous support zone. Aussie versus the yen, I called your attention before to the potential bounce from this golden Fibonacci level. We have a technical double bottom already confirmed with the breakout of the neck. We have resistance above the neck zone and a pullback to the golden Fibonacci 88.86. This is where the bullish 2618 completes. I do expect nothing more than a symmetrical ABCD pattern to complete at 92.83, and we have also the default target for that technical double bottom projected at 93.29. Of course, I can be wrong. If I'm wrong, the price will break the bottom, invalidating both the patterns, the double bottom, and the sequence for the 2618, or the expectancy for the 2618, which may trigger more momentum to the downside. For now, as I said, we have the bullish 2618 playing to the upside, which I expect to trade higher. The New Zealand versus the Japanese yen, technical double bottom, neck zone at 84.80. A clear move above the fractal should trigger a move to a clear breakout above the fractal should trigger a move to the 200% Fibonacci extension, which converges with the potential retest of the previous highs and monthly fractal resistance. We have the lows at 81.13. Of course, a violation of these lows will invalidate the sequence, which should trigger again more bullish, more bearish momentum if that happens. CAD versus the Canadian dollar versus the Japanese yen, very similar situation, but instead of having printing a double bottom, we have what we may call a three drives pattern formation. This three drives pattern should target the highs of the channel. A clear example of a three drives pattern was formed before for the Australian dollar, the first high, the second, the third drive, and then the market was forced to trade back to the previous structure support again. So basically the same we can expect for the Canadian versus the Japanese yen, or a higher time frame. Let's keep this on a daily time frame. A 3 drives pattern formation, so we expect at least an approach to the previous structure highs. We have also this crab pattern completed at 95.82, which is still a valid pattern, or inside the range which we will consider as inside the risk for that pattern. So basically I still believe there is a possible move to the 38% fib, just projected a few points above the recent highs at 100.71, also for the Canadian dollar versus the Japanese yen. Of course, the same will happen. A breakout of the lows will vanish and invalidate this sequence, and of course we will lose this trade. Now let's go into a lower time frame. Let's reduce or decrease this into a 4 hours time frame. Euro versus the pound. We have a nice support at the 50% Fibonacci retracement level, 0.8721. This may work as a potential or as eventual false breakout below, but we still need a clear violation of this fractal resistance position at 87.87. A breakout of this resistance will confirm this as a potential, as a false breakout, and that and a false breakout, as I always said, a false breakout should be followed by an extension to the golden Fibonacci. So we have the golden Fibonacci projected at 88.28. As we can see, that converges with the weekly fractal resistance, which is the previous structure highs and previous fractal resistance. Okay, so that's a move to this Fibonacci extension level that will complete also the bearish shark pattern. So I will expect after that the price to start to pull back again. Pure speculation, I don't know what will happen. In fact, we have also what we may call a potential inverted edge and shoulders now starting to emerge after the recent retest of the highs and the pullback. So we have also this kind of a potential inverted edge and shoulder, so which makes this resistance the next zone. So we should target again the weekly fractal after a breakout of the resistance. We should target this previous structure resistance again. This is euro versus the pound. Euro versus the Australian dollar. I need to go into a higher time frame and rely on this time frame. This is a daily time frame. We have this, we can see this move to the downside, and then the price finds support and then starts to print these higher lows being covered by this trend line resistance. So we are below, we still below this trend line or structure trend line resistance. And as you can see, I also draw a potential edge and shoulders formation for euro versus the Australian dollar. I projected before this shark pattern at 160.87. The price did not complete by just by a few points that sequence as I expected, and starts to pull back to the next zone of this double bottom. So that being said, I will not be surprised to see the eventual formation of the head and shoulders pattern. Of course, that pattern will only be confirmed or validated with a clear violation of the fractal support. That opens the window for a fall or a drop back to 46.91. But we have also the golden Fibonacci right there at 49.29. And this sequence, okay, double bottom, followed by the golden Fibonacci retracement that calls for, again, the bullish 2618 trade setup. And for that, well, from this point, or from this Fibonacci level, if that happens, we'll start to plot the possibility to form an ABCD pattern with new higher highs. In this case, it is projected at 6620. So, but again, one thing should guide us to another. You have the edge and shoulders, a drop back to the golden fib, completing the bullish 2618. The market can trade a few points lower just to achieve the default target for that edge and shoulders, and then starts to bounce, completing or forming the sequence, expected sequence, and forming the ABCD pattern above. Okay, that's what we will expect if that happens. So let's pay attention to a clear violation of the weekly fractal support 152.56, and then later the eventual pullback to the golden Fibonacci level, which is now projected at 49.30, let's say. Okay, if the price pulls back to this price zone again. Pound versus Aussie, we have also an eventual edge and shoulders pattern formation. We are now being rejected, very similar with the euro versus the Aussie. As we can see, we have also the golden Fibonacci 157.48 acting as element of resistance, forming that right shoulder, or helping the formation of that shoulder, right shoulder. And we have the similar happening for the pound versus the Aussie. We have the golden Fibonacci at 79.65 being used as element of resistance, and a breakout of this support level should trigger that same pattern. So I will expect a move towards the 200% Fibonacci extension 168.45, which converges with the golden Fibonacci extension right there. So we have a golden Fibonacci 61.8 converging with this default target for that pattern. Of course, I can be wrong. The price may not be able to complete or to give sequence to this pattern, and if that happens, I will pay attention to a potential breakout of the resistance, which may trigger a move and a retest of the previous highs, positioned fractal resistance at 92.21. We have also patterns projected above the fractal at 96.48, a higher degree bearish alt-bat pattern projected at the 113% Fibonacci extension of this swing low. Okay, projected above. One step after another, wait for a violation of the resistance or a violation of the support, which may trigger a move or to the downside or to the upside, and then later, if the price starts to approach this 113% Fibonacci extension, we will talk about that possibility. But the ratios that we have, taking into consideration the eventual bounce from this price zone without breaking these lows, an eventual bounce from these lows breaking the resistance, the recent ratios may also suggest later the formation of this pattern if we approach this price zone again. For now, as I said, pure speculation. Let's pay attention to these fractal support and resistance levels. The Dixie, I shared these on a weekly time frame. I believe some of you are familiar with this bearish crab pattern completed at the golden Fibonacci level. Golden Fibonacci back to the 38 and the 50% Fibonacci retracement level. On a daily, as you can see, we have the 50% at 101.50, and then and we have below the golden Fibonacci the 61.8 at 98.37. If I decrease my time frame, you can see I have also a bullish crab pattern projected for the Dixie at 98.38. So this is the golden Fibonacci extension level of the last swing high, this last swing projected below, and this completes or will complete if the price approaches this zone. If the Dixie approaches this price zone, this will complete the bullish scrap pattern at 98.38. So let's wait for that to happen. We have now, let's say, at least for now, it looks like a descending wedge. So I will not be surprised to see a reaction very similar to the one right here, when the market starts to trade and move sideways. Okay, very similar to what is happening right now, but at some point I admit more downside momentum for the Dixie. It has failed to find support at a very critical zone for me, at 103.32, the 113% Fibonacci extension, and usually when the market can't find support at these levels, it will search for the golden Fibonacci level. So, and for that reason, I'm now paying attention. The market can bounce from this price zone and start to trade higher, and I will search for other price events to participate, you know. But based on what I see at this point, if that continues, at least if the price continues to trade inside this wedge, or let's say inside these recent the recent range, let's say between 101.52 and 102.94. So if the Dixie keeps trading inside this range, I will point to more downside momentum at some point, and I will point to this golden Fibonacci extension if reached. Let's move into gold. I shared at the beginning of the week, I shared this crab pattern completed on gold at the golden Fibonacci extension level at 1928. We saw one first reaction to the downside after the formation of the pattern, but we have already new higher highs and a new fractal at 1937. So I still believe there is room for the downside after the formation of that pattern. This makes part of the risk when playing those patterns. We don't know, we never know the outcome. We never know if the price will react immediately, if it will take some time before the reaction, or if the price will fail, or if the pattern will fail. We never know the outcome. We know where the pattern will invalidate, which offers a price to exit your setup, your pattern, if the pattern does not exist anymore, so you exit your trade. So that means that I still believe there is room for the downside. There is a potential momentum for gold to retrace, to pull back, even though I also admit the possibility, and because gold was capable to hold above these fractals, specifically above the daily fractal printed at 1896, so it was capable to hold the entire week above this fractal when the entire market was shaking after the BOG and all that stuff during the week, shaking the markets. Gold was capable to hold, and it was capable, in fact, to print a new higher high. And for that reason, I will not be surprised to see gold continuing to trade higher, eventually a retest of the previous fractal, which I do expect at some point. I will not be surprised to see that. But even though after the formation of this crab pattern, and because the pattern is so perfect, that I still believe there is room for a retracement on gold. And I believe there's a lot of people waiting for that retracement. And there's a coin with two faces, because there's a lot of people waiting for that retracement. Probably the market will not print that retracement. And on the other side, if the big institutions start to approach the same the same symptom and the same sentiment, probably they will force gold to pull back a little bit. But that's not important. I tend to ignore all those factors and all the sentiments around the markets, because it tends to confuse my brain when I start to search for a pattern. The pattern is there, but then there's sentiment, and then this guy has said this and this girl has said that, and you start to mix all the sentiments and all the opinions, and you start, okay, what should I do? I should trade other thing than gold. So for that reason, I start to avoid the news. I start to pay attention to all those sentiments, and treat the patterns as they are and trade the patterns by themselves. Don't mix other variables into technical patterns and technical trading, because it makes no sense in my opinion. And that's my 2 cents. But for that reason, I still believe there's a possible retracement on gold. I'm not sure if it will be from this price on or not, but since there's a crab pattern, I rely on that same pattern for the retracement on gold. Silver, on the other hand, it's also printing heads and shoulders pattern formation, and this is a very simple interpretation. We wait for or the breakout above the resistance, which may trigger more momentum to the upside, or you wait for the breakout of the support. The breakout of the support should trigger a move to the downside based on the heads and shoulders pattern formation, and that pattern should target 22.17. That will depend how much time the price will need to achieve this price zone, but that may also converge with the reinforcement of this eventual channel to the upside or eventual ascending parallel structure. So if the price finds a way to trade at this price zone in a decent manner in order to target this price zone inside this channel, so that may also help the reinforcement of this channel support again on silver. Of course, moves or a breakout above the resistance, and we will see more upside momentum for silver. Now, this is the 4 hours time frame chart for the XPX 500. We have this trend line resistance, as we show you this trend line multiple times. We still, as you can see, we still threatening the violation of this structure. Okay, so we're still threatening that trend line. We have a new fractal at 415, and we have a new support at 38.93. In fact, we have a new support. Let me confirm this. Let me adjust those levels. Those are not correct. At this point, we have the daily fractal resistance moved to the previous structure highs. The fractal resistance, it's already here. Daily fractal support remains there, but the fractal support, the 4 hours, it's already at this low. So we have a new fractal support at 38.81. What is this right here? I need to delete this. Okay, we have new support at 38.81. We have resistance at 39.20. Actually, we are now threatening the violation of the recent fractal resistance. As we can see, we are also trading inside what we may call, and we need to see these, we need to see further developments during the next week, but this may be an ascending, this may be the formation of an ascending parallel channel or a parallel structure, and this may also be the bottom of the cup that I draw here. Of course, pure speculation. I don't know what will happen. I admit the possibility for a retest of the weekly fractal. If that happens, I will expect a small pullback later, eventually to the 50% Fibonacci retracement, and then a violation of the resistance to give sequence to this cup formation. Okay, so of course we are far away from the cup to form. We still need to wait for a retest of the weekly fractal, as I said before, and the pullback. But I since we are trading inside this range, let's say this parallel structure, and we are approaching the bottom of this support channel or the channel support, I will not be surprised to see SPX 500 starting to bounce from this price zone towards the highs again. Of course, I will be forced to adapt my thoughts if the price breaks below the support. Of course, my brain will start to adapt. Will be forced to do that, even if I don't want to, but I will be forced to do that. If the price breaks below the support, I will be forced to adapt. Even though I still believe there's a chance for a retest of the weekly fractal, bounce from this price. So not only for the SPX 500 but also for the Nasdaq that I showed you before. Let me try to pull back this. Let me try to pull that chart again. Very similar to the Nasdaq, which is also bouncing, and this was very strong bounce in fact, from the 38% Fibonacci retracement. So this is a retracement from the recent move to the upside, a retracement to the 38 in that it has offered support for the Nasdaq. And as some of you already know, when the 38% Fibonacci retracement offers support in an uptrend, that's a sign for more bullish and strong bullish momentum. So for that reason, both the Nasdaq and the SPX 500 are both trading in a price zone that I think it may offer, well, the market already started to bounce, but it may offer more bullish momentum. Of course, if you pay attention to those fractals and if you prefer to wait for the breakout of those levels, it's also a suggestion. So we have a fractal at 14.15, as I said, and the other one at the lows, or the recent one at 38.81, and then the major one at 37.63 and 41.41 as resistance, as you can see here. Then the German DAX, as I shared also with you before at the beginning of the week, we have also this bearish scrap pattern projected at 15,286, the golden Fibonacci 161.8% Fibonacci extension. We expected a retracement. The market starts to pull back, but it didn't find support at the 38% Fibonacci retracement. So this is the default target for that pattern. And we saw the German DAX finding support at this point at 14,900, so basically at the recent low. So I need to see the German DAX trading at this at least a 38% Fibonacci retracement, and that guides me into a question, because for that to happen, for this pullback to happen on the DAX, we also need to see, actually there is only two things that may happen on the SPX 500. The SPX 500 will follow, and probably a breakout of this ascending channel will happen, forcing the price to break below, or it moves sideways, okay, or it will start to move sideways when, and during that process the DAX trades lower. So the DAX, only two options. During this process, while the DAX moves down, XPX moves down together with the DAX or moves sideways. There's only two options, because at this point I need to see the DAX, the German DAX, being pushed at least to the 38% Fibonacci retracement level. And of course, one thing implies the other. The SPX will move sideways or will move together with the DAX. Now let's start with, let's finish this introduction or this video for Friday with the FTSE and with Bitcoin and Ethereum. Let me just change these to, let's start with the FTSE. Let's move to the FTSE. Very similar pattern here. I have a short position from the golden Fibonacci level. So basically I have shorts towards 76.63, the 38% Fibonacci retracement level. So basically at this point I will start to break even my trade. So this is also the crab pattern. It's a very simple, clean and white chart, as you can see. No, not full of different studies. Very decent pattern to trade. I do expect the FTSE very similar with the DAX, actually, the German DAX, to trade a few points lower, at least to the 38% Fibonacci retracement level. So let's finish with Bitcoin and Ethereum. During today's session, you saw a nice move to the upside on both Ethereum and Bitcoin. But I still sharing this chart with you, because we're still trading inside what we call the range of risk for these patterns. So we need to see a clear move to above the starting point of the pattern in order to invalidate that same pattern, and that means that I will not be surprised to see that happen. So invalidation, bearish bat pattern on Bitcoin and Ethereum. And for that reason, as I said before, we are also paying attention to a potential move to the upside towards the golden Fibonacci level, which was projected at 25,300 on Bitcoin. Even though, while below the recent highs, everything is possible. Okay, only a fool will not adjust their thoughts. Okay, only a fool will not adjust their thoughts. If for some reason you believe this pattern will work, as soon the pattern starts to invalidate, you need to adapt immediately. You need to change your mind. You need to shift from a bearish to a let's say to a continuation of a bullish momentum, if that's necessary. If you are bearish after the formation of that pattern, which is the case, I was and I still believe there is very similar as gold. The pattern is formed, it's here. We still believe there's a probability behind that pattern. Of course, the market can print a new higher high and eventually then starts to pull back later. It's one of the possibilities. You know, you are now building kind of an expanding pattern formation right there with higher highs and lower lows. So I will not be surprised to see Bitcoin printing a new higher high, threatening the invalidation of the pattern and then starting to pull back again. So everything is possible. I have started, when I started to trade, I feared the market when the market started to move against me, and I've done things like closing my trades before invalidating the pattern to see then the price pulling back again. I survived later a trade just by a 5 or 10 pips on euro versus dollar in a situation like this. I holded my trade to the limit. I didn't move my stops from the initial stops. I remain loyal to the pattern. I saw the price approaching and threatening my stops by 10 pips and then starts to pull back again. And I closed that trade with profits, allows me to break even my trade and maximized my profits later when the price approaches a second target. So don't close your trade. If you are shorting this trade, don't close your trade unless the price invalidates the pattern, achieving your stops or touching your stops or eating your stops. Okay, don't do that, because the market it's still possible to see the Bitcoin and Ethereum pulling back after the formation of this sequence. So basically, I will not be surprised to see. I never get surprised with the financial markets. I have been kicked out many times from the markets to be surprised at this time of the career. So it makes no sense for me to become emotional connected to those trades, you know. So if the trade fails, move forward and search for the next one, and then the next one will be projected above the golden Fibonacci level on Bitcoin, and very similar and very much the same on Ethereum. If the price fails to find resistance at this price zone, we may see Ethereum being forced to push or to retest the previous highs in monthly fractal resistance above. The same will apply. If you are shorting this pattern, rely on the pattern, wait. In case of Ethereum, we are trading below the starting point of the pattern. We need to see a clear move above these highs in order to invalidate that pattern. Wait for that to happen. Just because we see a very decent and strong moves during the next or the previous days, actually since Wednesday the price starts to bounce and after the formation of this support, very decent move. It may trigger a lot of people positions to the upside. but that doesn't mean the price goes higher. Okay, rely on the patterns, don't rely on false and emotional reactions. So there's a bearish bat pattern printed right there. We need to respect that pattern. That doesn't mean you'll not be capable to, you are not stuck into this position, you know, as I said. So treat the pattern as itself, as a pattern. If the pattern is valid, keep holding your positions. If the pattern invalidates, exit your positions as soon as possible. The invalidation of the pattern will always guide you into a next step or a next process. And the next process in this case, when you trade advanced pattern formation, is very easy to understand. When one specific process fails, you start to search for the next one, because it's the usual price behavior after a failure. So if the price fails me with the bearish bat pattern, there's a quote that I started to use years ago, which says, if the bearish bat pattern fails you, just grab it. Okay, if the bat pattern fails you, just grab it. And because usually when the market fails the bat pattern, usually it will invalidate the pattern, of course, and it will search for the golden Fibonacci extension level. And for that reason, my next price zone to pay attention on Ethereum and Bitcoin, it's at golden Fibonacci extension. In this case, for Ethereum, it's projected at 2040 level, the previous fractal and monthly fractal resistance right there also. As I said before, first of all, it's a step by step. Be careful with the potential retracement from this price zone without the invalidation or without breaking above. And even if the price trades a few points above the starting point, that doesn't invalidate entirely the pattern. It starts to threat the invalidation, but it's possible to see the price trading a few points higher just to threat and to want those stops positioned immediately above, and then starts to pull back again. So be careful how you manage these trades when you put your stops above the starting point of the pattern. Always provide some room for them to work above the starting point, because there will be people with their stops positioned immediately above the resistance. It's not difficult to see and to end those stops, and then starts to pull back from this high. So for that reason, when you short the bearish bat pattern, always take into consideration the starting point of the pattern, and you need to provide some room for them to work. Of course, you need to measure your potential reward, and you never enter the market to lose more than what you expect to win, which means you never put your stops where you will lose more money than what you expect to win. In this situation like this, you can use as an example. So you have the 88.6, you have your potential reward for that trade, so which means a 12.13% below. So that's my maximum risk, 12.13. So this is my maximum risk for this setup. Okay, I will protect my position from being hunted, positioning my stops immediately above. I can put my stops a few points above, play a one-to-one risk-reward approach, protect my position from being hunted, as I said, with those stops positioned there, and try to play it like this. Okay, if you try to minimize your losses, it may work, but as I said, if you put your stops immediately above these highs, and if the objective is to hunt all those stops, you will be hunted with your stops positioned there. You always need to take into consideration the previous highs and the completion of the completion point of the pattern and the starting point of the pattern. Measure the potential reward and your potential or maximum, well, not your potential, but your maximum risk for this setup. Okay, always try to make that exercise and repeat that over and over again. Always try to minimize your losses in pro of your reward. Always try to get a 1-2, 1-3, 1-4 risk reward approaches if possible. As I said, not for the first time and multiple times before. The maximum that we are allowed to use is a 1-to-1 risk reward. Take into consideration that if you repeat this process over and over again, and if you are a 50% win ratio trader, you probably are a break-even trader at the end. After 100 or 200 trades, you stay at the break-even line or even in a loss. So take that into consideration. Always try to minimize your losses and maximize your profits. As soon as the price invalidates the pattern, exit your trade and think in the next process ahead. That being said, that finishes my video for today, for the week. I hope you enjoyed. If you enjoyed, press that like button. It's always nice for me to get that feedback from you. Of course, just to finish, I want to invite you to join my Discord server. Of course, for my subscribers, it's an important place to be, to get familiar with those advanced pattern formations, and to be prepared for the patterns the market tends to print for us, and to try to apply a strategy to trade them and to take advantage of these events. So I hope you enjoyed. Have a nice weekend, everyone, and with your families. And I wait for you the next week, next Monday. We will be here again talking about potential patterns to trade. Have a nice weekend. Have a nice Friday. Stay well.